in the room. So you're able to tell me whatever you want to tell me, and I can see it, right? We don't like, nobody can see anybody else's comments except for me. Absolutely, SP. Perfect. So look, guys, let's get on into it here today. Before we begin, got to let you know I'm not acting as my capacity as a commodity trading advisor. I'm simply here to show you opportunity. What you guys do with that opportunity is all up to you, as well as you got to be aware of any and all financial risk, understand that risk, be willing to accept that risk and take on that risk. And any trades you take, just know that you are doing so of and on your own volition, my friends. For those of you guys that don't know, my name is James Bishop. I am a licensed financial professional, but I will not be acting in that capacity. I have my 215 and my 65. Been in trading and trading education for 15 plus years, founder of a managed fund. So, which is doing quite well. I'll actually, I don't even mind showing you guys a little bit on it. Second here. Yeah, so we are sitting right now at the end of September, while the S&P has been up 10.56%. We are up 29.1% on the year. And over the last 3 years, we have eclipsed 105% return combined. And if you would have invested, 250 is our typical minimum, but if you invested that this year, 500 this year, you'd been at 665 as of now. So the pretty darn good return so far this year for the fund. And then, we'll talk a little bit later about other asset management things and things that I've seen in the market. And I'm going to share that stuff with you because there is a lot happening that is going underreported and isn't being shared as much as I think it should be. And I want to make sure that while we're in here together, we are going to be prepared for what's to come. If you keep continuing to attend my sessions, I promise you will definitely be prepared. I have my MBA in Finance and Global Portfolio Management and working on my doctorate as well. 2 more months and I'm done with classes. Just have to write another 20 pages and present the same thing 4 times. And then, hopefully, I'll be just about ready to propose my dissertation. And then the experiment and things will be done. And then I'll be Dr. James Bishop in here. Quick housekeeping. Discord. Let me see here. Let's see. I am going to, so we have a Discord server that I share with everybody here, right? We have a good amount of people on there. If you're not part of it, I would go ahead and join. If you don't have Discord, I would go ahead and join. Why? One, this will give you good access to myself. You can chat me directly on this. I don't not let you guys chat with me. 2, we send out, trading alerts and trades and other opportunities every so often. 3, if there's something like this week, I did like a midweek update. Let's see. Did anybody catch that midweek update or anything like that? Yes or no? And then I also will, post the links to my to this session recorded for you guys as well. So you guys will be able to join in on this, join as you please. So, let's see. Appreciate you all joining right now. I see a few people are in there already. That's awesome. So let's see. And then the other is we have a few special sessions coming up. The first of which I'll send you guys some of them, but one of them I just apparently don't know how to operate my computer. Here we go. One of them is this. Tomorrow, 4 p.m. Eastern, I am going to be hosting a special webinar that's going to be talking more so about protecting your retirements, protecting your investments, protecting things like that, that will allow you to retire without literally zero market risk. And I can legally say that because we have a 0% floor in these investments, as well as guaranteed gains. So if you'd like to join that session, there's the link for that as well. I'll give you guys about 30 seconds to register. And when you're registered, type in done for me. That way I know you have registered. Let's see. Beautiful, beautiful, beautiful. Awesome. Fantastic. Appreciate that. Now, I don't know what that is, but we'll look at that. Thank you so much. Beautiful. I will love to see you guys there tomorrow at 4 p.m. Eastern. Now, additionally, guys, let's get into this week's announcements. Well, government's still shut down, so who knows about news-wise what happens? Let's see what we get. We get kind of what we get when we get it. And last week we got the small business index. That didn't do nothing. Jerome Powell did speak last week. Other members spoke. That was about it. And then this week upcoming, what are we missing out on? We'll have Chinese GDP and their production and retail sales. That'll be interesting to see. It won't give a whole lot of effect. Well, it could give a lot of effect to U.S. market. And then I don't know if this CPI data will be coming out or not. I mean, government shutdown is still going to be affecting this information. So we'll see if CPI data comes out on Friday or not. So to be or not to be, that is the question, to say the least. Let's see. Perfect. So let's go into earnings reports. So we have quite a few stocks earnings. Oh, I'm going to go back here. Quite a few stocks earnings coming out this week on the 21st. We have Netflix, GE, Coca-Cola, RTX, and ISRG, which is Intuitive Surgical, like Resource Group or something like that, I think. Tesla, IBM, and AT&T. Then we have Blackstone, Intel, Ford, and Procter & Gamble wrapping up the week. If you guys want to, go ahead and screenshot that and type in done as well. We'll talk a little bit about these stocks. Try to get to the market a little bit earlier these days. Beautiful, beautiful, beautiful. And if anybody wants to take that screenshot and post it in Discord, feel free. I want you guys talking in there and chatting in there and using the tools that I'm sharing you and asking questions and all sorts of stuff. So, feel free to throw that stuff in there as well. So, obviously there are some stocks that we generally always take a look at: Lululemon, UNH, Zoom, OKLO, SMR, AMZ, AMZU, and Rigetti and FNMA. We were looking at these two were weights still. We didn't get into those last week. Hence why I didn't have a price point there, but we'll give an update today. Of those stocks, Lulu's still up about just 55 cents, UNH up about $68, Zoom up about $7, OKLO 52, SMR 6, and then Rigetti is up about $2.64, and then FNMA is down. But are there any other stocks that you guys want to go through? I know Tesla's probably on the list there. I'll throw Tesla on there. Let's see. Go ahead and type in whatever you guys want to look at. MU. Okay. I'm going to just wipe these ones out down here, and then we'll get to anything you guys want to look at. Just type it in. VRT, TSM, CVNA. We can do a little QQQ. We got Coinbase up there. You can. I'm Don't promise to give you a direction on it one way or the other, but you absolutely can. IBRK? Or do you mean IBKR? Solomon, I hope you're doing well as well. USAR, WMT. Anybody else? Going once? Oh, AVGO. AVGO. SP, that's awesome. Oh, we're gonna check out OKLO. Don't you worry. So we got a good list here of stocks. You know, some we'll skip around. Like, you know, I probably won't go through all of these. Oh, that was one other thing I wanted to tell you guys. A couple other things really quickly. Monday, right? So not only it is Diwali, but it is also barely a banking reporting day because we have, I don't know, all the banks reporting, right? All the banks, it looks like 49 companies reporting, and the majority of them banking companies. We got a couple of pharmaceuticals and therapeutics, lithium, a beer company, but a lot of banks coming out. And with what happened with those mid cap banks and small cap banks earlier this week, it will be interesting to see how earnings and what people are going to be looking at them as well. Okay. Just know that it is going to be very, very interesting to see what occurs there because, you know, I mean, the market is just, there's a lot of things happening. I can tell you that, you know, anecdotally here in Florida, two of the surrounding cities around me, they are leading the nation in foreclosures and as well as delinquency rates on mortgages. Right now, there's about we eclipsed the delinquency rate that of 2008, like 5 months ago. So we're higher than we've ever been in delinquencies and mortgage delinquencies because of those interest rates, as well as extremely high home prices. And of that, it's the first FHA loans and the VA loans that are unsecured, that are, you know, not doing so well. Additionally, we had a little bit of news out of the world here. One being that the US is tiptoeing away from many of Trump's signature tariffs. So, what happened was, I don't know if you guys knew this or not, but back in September, excuse me, guys. Hold on one second. Sorry about that. Back in September, one of the things that occurred was there was a almost like an addendum to the tariff bill from earlier in the year, where um, basically if certain things happen, they would reduce or remove entirely the tariffs that they were charging to a country, depending on whatever those things may have been, right? And well, I don't want to get into all of that today because it gets it's an exhaustive list to say the least. However, Joseph said we had a tariff bill. First I'm hearing about it. Joseph, I love it, my friend. So, you know, we're seeing that some of those tariffs are actually being reduced, which should hopefully bring back trade in the way it needs to be brought back. Trump's extends exemption on auto parts and but 25% tariff on imported trucks. Obviously, that one's not a big. Personally, that one's not that big because the number one selling truck is an American made truck. The number two selling truck is American made truck. The number three selling truck is American made truck. So we're not really worried about that too much. Yeah, Joseph. Okay, semantics. I apologize. Not the bill. It was an executive order. You know, sometimes people can't see the tree, can't see the forest because they're staring at the leaf. You know what I mean? Sometimes people can't see a tree because they're staring at a leaf. China rare earth exports fell in September by 800 tons. I wonder where it fell from. What countries didn't they export to? Interesting how that just happens, right? And that's really what, we saw that Trump walked back his earlier post, kind of with a tougher stance on China. And because it hurts both the Chinese economy and the US economy when we have things, when there is no trade between the two countries, or when trade is costly between the two countries. Already, China has sold and is actively selling our debt. The IMF has reported that, hey, your debt is out of control here to the United States, and something needs to be done about that debt, because people are no longer buying that debt or have the faith in the US dollar the same way they did. Hence why China, Japan, Canada hasn't started yet, and Europe hasn't started yet. But all of those countries are either actively selling or are going to be selling US debt because they no longer want to hold it. They no longer want to hold that. And it's a very interesting thing that is occurring here. And so, where does that leave the U.S.? Well, really and truly, there's two potential outcomes I see right now, and a potential third as well. Two of the more realistic ones. One would be revaluing the gold that is in U.S. possession, right? So the gold in Fort Knox or wherever it's held, they don't tell me that yet. However, the problem with that, right? That gold was valued in 1971 and it has never been brought to value to today's market. Well, if gold is at, let's say 4,000, 5,000, let's just say 4,500 for simple math, right? That would be at about $2 trillion in assets that would allow us to either borrow against that and pay down debt and finance our own way again. The next part, but here's the ramification of that. When you do that, well, now you're telling the world that gold is actually better than the dollar. So why should we hold your dollars? The other way is increase taxes. It's just, which I don't think anybody wants that. So that's the two ways that could get you out of this. The simplest. The more difficult and unlikely would be like again going back into that trade deficit mode, which I know would not be popular under this administration right now, because they have a different outcome that they're trying to achieve. But walking back that trade deficit, what people didn't realize with that trade deficit is that they took that deficit and then they bought US debt. So they held because we had a trade deficit with them. So it's an interesting concept, to say the least, but we shall see. Still, healthcare issues are pushing Washington to just kick the can down the road and stay closed. And the reality of the world right now, let's see. What was that? The other thing that I was going to talk about here. There was one other major economic thing that I was going to talk about. I know even Israel launched airstrikes after the ceasefire. That just happened again. I know JD Vance is supposed to be headed over there to kind of head up a peace deal. And then who knows what the Venezuela situation is going on with down there. I haven't even gotten into that or wrapped my head around that. And then I cannot remember the last thing that I was going to discuss, but let's get into the market right now. So let's start with Lululemon. We'll just kind of go back and forth through there. Okay. So we'll go Lululemon, Lulu. Lululemon, I'm still, what in the world? Apparently my computer don't want to work. Give me a second. There we go. Lululemon, I think this is an opportunistic time to be in Lululemon. I would, if you're not in it yet, again, I'm okay at 167. I think we've kind of reached a floor of support here. And my minimum here is at 197. So that's a $30 move. My next minimum is 329. I think with that move from American Express, that really helps things as well as a few others. If we're going to look at Fibonacci wise, I'm going to just manually draw a few here just to kind of get us to where we need to be. So there to there, there to there. We hit that one. Oops. And then this, we would have broken this down fib. So now we would be back up in an up fib. Looking at this daily. 1, 2, 1, 2, 1, 2, 1, 2 there. And then there. It's like I've done this once, twice, or a billion times in my life. Okay, we broke that down fib, or yeah, that up fib now. That nearly broke. And this is where we are. So what I'm looking for is to get back up to here and then eventually back into this area if we see another downfall. They report earnings on what? Why is this not showing me anything? There we go. They report earnings in December, which will give them a, it'll give them I anticipate this to come from earnings with Lululemon, just to kind of wrap this up with a bow. Is not only will we see like an update on their overall sales, but I think we'll get kind of a preview of what happened in Q4 with like, hey, how is that American Express thing going? Are we seeing more same store sales, et cetera, et cetera, et cetera, out of that? So that'll be an interesting look. Again, I don't think this company's going anywhere. I think price points have risen, but people are still shopping there. American Express's platinum card promotion that they're doing, where cardholders get $300 per quarter. The platinum card's been geared towards that millennial and younger generation, and so that is it fits right into that style and everything that they go for. And athleisure is still huge, so we will see. Okay. So the traditional Fibonacci, what Tyson's tool does is just a little bit different. He's looking at retracements. This is a combination of retracements and extensions, right? If I wanted to add on Tyson's tool, which I will be using here as well, all I got to do is this one and add to chart. And even Tyson's tool says we should be buying at least to 188.32. So we had a bullish move. It rallied up, pulled back. And we're just waiting on the next rally up here on Lululemon. Now let's flip on over to UNH. UNH. So we have that bearish signal that we need to be looking for. So I'm looking for this 321.86. If you are in UNH, I will tell you that personally, I would get out and then be looking for another buy at around that 321 mark. Okay. So be looking for another buy around this 321 mark. There's a gap there. I'm going to hide this really quickly. There's a gap right in here. We have a sell. We have selling energy still in control. We'll probably have another quarter of missed earnings when that comes out next week. The 28th, yeah, I think is next week. So we'll probably have another quarter of missed earnings, which would push that down. And then we would get the next rally up, which will be, I'm telling you, this thing will go to 583 without a doubt in my mind. Right. Without a doubt, I know this will end up getting there. So, and here's the perspective on the Tyson's tool. This is a great chart to show it. So notice I said that we would go down to right into that 321. If I overlay Tyson's tool with that fib, you can see that my AB, where he has his AB, is from here to here. And if I would draw my fib from, if all I did was extend my fib to the same spot, our marks would end up being the exact same. Right. That's all it is. It's just a difference of how we draw what we're drawing. Okay. Let's see. Phil, yes, I'll do that here, and I'll do that right now for you. Here's the Discord. And thank you, Contessa. I couldn't see your name, or Contagia, for sending that link out. Or this screenshot out. There's the Discord link again. Perfect. So now let's take a look at Zoom. Zoom's an interesting one. I am very much a propose. I really think that Zoom will have that next big massive push up. Whether it's an acquisition by Salesforce, whether it's a whether it is, I could see that happening, or they end up becoming and building their own CRM at a certain point. Right. I could see that absolutely occurring. And if that occurs, that would, we could absolutely see that happening. However, with that, if you have the chance to buy it between 73 and 80, I would buy it, because I honestly think this could be $100, $200 stock, and it should sit around there. I mean, their earnings history looks pretty nice, if you ask me, since inception. And then they're following the pattern, the IPO pattern, as I call it, to a T, right? The IPO pattern, for those this is your first time, stock IPOs, it goes explosive. You have those that took that massive write up, sell. Then you get those, locked up shares. That period ends, and there's a big sell off where all the people in the company were taking profits, and all the private equity people were taking profits that, got the company to where it is. Then it generally sits flat for a while, and then it'll have its next explosive growth. So that's what I'm looking at for Zoom. And that's why I don't mind holding it. Like if I'm in this for a year, I'm not worried about it, right? I'm locking up a couple $100 to, a couple grand on some shares, and that's it. I'm going to hold. Zoom's not going anywhere. We'll check OKLO really quickly. OKLO, this is, we're seeing it pull back as we thought we would last week. We talked about Monday putting your stop up to 10. The market had closed on Sunday at 147. We said put it at 137. Then the market rallied up, and I said just trail the market by $10. So the market went up. It went up to 170, 183, and it closed at 173. So you would have been out here before the two big pullback days. So if you're out of it, that's great. Wait till it hits about 140 before you start buying it again. Right? If we see this hit 140 or so, I am comfortable with you guys buying it. I think OKLO is going nowhere but up, especially with the the backing that they have now by OpenAI, which OpenAI has. I mean, you can call it unlimited amount of money. SMR, very similar as well. We've seen its pullback a little harsher, but I'm all for buying SMR even at this level at 44. Because the worst that happens is maybe we come down here to 34. I'll take $10 worth of risk in knowing that I think that this will pop up higher. So we're going to call SMR. I'm going to put this here. We bought it at 38. It's at 44. You can still buy now, but obviously you'd want to wait for a blue dot to appear before you just got in buying. So wait for that blue dot to appear before you buy. If we, that's something that I think is a non-negotiable. So just wait for that to appear. Let's see. Oh, DJ, that's a personal tracker for me. Um, I'm only using that to keep track of what I'm doing. Eventually, if I turn this into like I'm debating, just let you guys know internally, doing like a 3 day a week, so a Monday, Wednesday, Friday trading room, and then on top of it, my Sunday classes as well. Um, Definitely debating on that right now, but if I decide to do that, then I'm going to be building it and sharing it all out and all of that. Okay. So no worries at all there. Next one, we're going to go to, let's check out a little Amazon, AMZN. And let's see, Amazon. Look, I'm a, I'm a buy Amazon person. They ain't going nowhere. Just show of hands real quick. How many people bought some on Amazon this week? Exactly. I don't even need it. Y'all don't even got to say yes, right? You don't even got to say yes. So there you go. So we all know where Amazon's going. It's gonna go back up. It's not like it's not going to. It's going to stay here. They're gonna beat earnings. This is Q4 where people buy more. We're gonna have Black Friday, Cyber Monday, all of that come through. Yes, they report earnings at the end of the month, but I don't think it's going to be, even if it crushes them and they come down to 194 where this gap is, right? This is my low on Amazon. I'm going to either be Nostradamus or Nostradamus. I don't mind either or, but I'm going to call the lows at 194.70, 194.71. Get a little bit of it or wait until you get that blue dot in there as well. AMZU, a different way to purchase Amazon. It's a 2x ETF, directional ETF. So you get larger returns and it's cheaper. So, I'm in this at $32. I bought it on Friday. And I don't mind holding if it falls to 29. What's $3? But the upside is huge, right? The upside is absolutely huge. You feel free to wait for that blue dot to get in it and then take the rally up, right? Wait for the blue dot, then take the rally up if you so choose. And let's get into a couple others. So we will look at Tesla because they report earnings this week as well. Tesla, do I think they'll miss earnings? Yes, honestly, I do. I think there's been probably a good slowdown in the number of EV vehicles purchased, as well as just a slowdown in the car market overall. So I think we're getting set up here for a miss earnings. I am telling you now, I would not be buying this blue dot. Now, I've been wrong before, and I'm okay being wrong again. But I would rather be a little on the cautious side, because if it's off, it's going to be they're going to get punished, right? They will absolutely get punished. And we saw Q1 and Q2 was off. Q3 was better, but what's Q4 going to look like, right? You got increased cost of goods, increased headaches dealing with China and Europe and other countries. You have development costs, production slowdowns, various things. And then their cars are getting cheaper and cheaper because they're just trying to sell them. Okay. They're just trying to sell them. That's hedge fund trender, Olga. Hedge fund trender. I will make sure if you email me, Olga, I'll send you a link to a webinar that I'll be covering that on this week. But it's a phenomenal tool. I will not be taking this buy right now. I'm going to wait till after earnings. I'll just be honest with you. I'll let somebody else, I will either do like a spread trade, but with earnings, or I'll do, a straddle and let the market pop one way, cut the other leg, and make money that way. I will not be just taking this directly into earnings. Is that understood? Yes or no? I just want to share that with y'all. Make sure you guys know my stance on that. So we'll take a look at AMD. A lot of people ask to see that. AMD again, you don't get these parabolic moves without some sort of pullback here, right? The market hates gaps. I do believe that we will see AMD come back into where it needs to be, somewhere in this area, right? 172 to 203. That's a $30 gap. We know that that will absolutely potentially fall right in there, right? UL, Unilever, it's done well, done very well. What can you say, right? They reported back in July, a lot of good opportunities. What's been the catalyst here for Unilever? Um, you know, I see that they raised, 650 million, but there's also a lawsuit with Chobani as well. So I don't know how that's going to play out. So, look, right. That is, don't know how this is going to play out, but we could see this at least to 63.71 and fill that gap, and push up. We haven't gotten the bearish sell off yet, though, which is great. So if we don't, then that's fine. There's still a massive gap down here, but that's where that lawsuit in Chobani could come in and really wreck some houses here. So just be aware of that, and it could take a while, right? We saw the lawsuit happen for United back in 2023, and it wasn't until 2025 did we find the verdict out. Okay, so I am not a big fan of just parabolic moves. If you're in it, hold it for a little bit, trail it by $2 or 10%, just so the worst thing that happens to you is you make great return there. There's too many gaps in it for me to love it right now, but it's there. Let's go now to IBKR. That was one somebody has to look at. IBKR. This is still selling off. It's not no inkling. Well, no inkling of slowing down in this sell-off. However, their earnings were better than expected this week. I think they got really hit by the banking issues and all of that. So potentially a push back up into $70 from where it is. I don't mind that short-term play if you plan to do that. However, we could get longer term. This just come back down to a level of support and resistance. We blew through this level of support. Waiting, your next level of support is right in here at 63. Sit on the sidelines a little bit with this before you just jump into that. Okay. Let's go. Couple others here. Carvana, CVNA. It's so crazy that Carvana's $300. Like, I remember, back in here, like looking at it as a $9 stock. That's insane. That it's $300. Look, I don't know about their earnings and what that'll look like later this month. I know auto sales are down, right? Then you also have a lot of furloughed people, and because the number one employer in the United States is the government. So got a lot of furloughed people out there. So this could really push things down here to 258.94 is not out of the question. Right. 300, not out of the question at all. So even though this says bullish, I'm going to wait until at least I have market energy telling me to buy, or I have a blue dot telling me to buy, or I have my EMA crosses telling me to buy. Right. I'm not just going to take that buy just because it's that I got to have something else in there helping me with that buy. THM. Again, we talked about this. There's no way in the world I'm going for something like this. There's no way. I wouldn't trade it with my worst enemy's money. Honestly, I really wouldn't. Let's see. OTC markets, THM. Let's get a little bit of history on it. Um, and while I have it here, well, I throw it in here. THM. Tower Hill Miners, right? So, let's look at them. Hmm. They've lost money for the last 3 years. Their price to book value is 1.63, is not going up. No data for that. Have no clue what percentage of their revenue is gold. And nothing there as well. Private equity company bought them. That could be a saving grace. I'll tell you why. Private equity companies love to run the value up, saddle the company with debt, pay themselves heavily, and then just dump it to the market. So could be good that way. We'll see. Let's go through a couple other things. Do you know where they're doing their mining? No. That's a big thing as well. Let's see if we get geographic revenue where we're pulling most of our revenue from. So they have zero revenue. uh personally, I'd say stay the hell away. If you want to buy a few shares, like look, with something like this, right? It's $2 stock. Okay. If you want to throw $200 at it or $1,000 at it, and you can afford to lose that $1,000 or at least half of it, by all means. I just wouldn't be in this company. For me, everything here just says this is a pump and dump, and it's not, this. So, what people don't realize about when you see charts like that move like this sometimes is that some of this could be the company was a different company at one point in time, right? It could have been an entirely different security at one point in time, and you just don't have the disclosure, and you haven't looked into the background financials and their filings, right? And how the documents were owned. Where are they filed? Where are they based out of? If they're a company based off of Seychelles or Mauritius or the country of Belize, which actually is an island in the middle of the ocean where there's one road and it's all banks and you have to get there by a boat, right? If you're in one of those places, then it is an absolute dog walk of a company and you wouldn't want to be in it. Okay. I don't want to mince words here. So I'm going to tell you that, like, do your research before you get into these low dollar, low value companies, because you could lose your shirt and everything else. I've seen it. I know people that promote penny stocks. I know them personally. I know how much money they make every time they do a promotion. I know them. And I wouldn't eat dinner with them. They've never been in my house. They've never met my wife, my dogs. I wouldn't give them the time of day, quite honestly. So, let's see. How do you feel about gold and silver junior mining companies? I'm not a big fan of gold and silver junior mining companies. If you're not sticking with the biggest, the next one that I would go with is like PPTA. Peter Thiel owns this company. I've been telling you to buy them since they were $16. I've been telling you to buy. Actually, I think our first buy on this was $9. Anybody get into this? Yes or no? I know we talked about it back in here because I remember this gap in here. And then have you seen what's happened since? We've gone from like $13 to 20. You know, at one point we were up over $30. I will say that PPTA, I think, is going to be another buy very, very soon. The backing of this company, this is a company that I absolutely, they have active mines, they have active revenue, they are defining what they're mining. They own the land that they're mining. They're not leasing it. And then you have people on there that own the company are like Peter Thiel. Okay, so are you more into buying derivatives than buying securities? No, I'm about the same, right? I just would rather buy. Look, the simplest way that I would explain this is that with a little bit of an anecdote of the worst by far and away, you can look up any book written on Warren Buffett or The Tao of Charlie Munger talks about this. The worst company that Warren Buffett personally has said that he ever invested in was Berkshire Hathaway. Let me repeat that. The worst company that he ever invested in was Berkshire Hathaway. Why? Berkshire was a $3 stock, and they used to make the interior linings of suits. That's what Berkshire Hathaway did. And then he bought the stock because what used to be higher. And he said, everybody's going to wear suits forever. And then it dropped and he bought more and it kept dropping. He kept buying and buying and buying. And next thing you know, he had all the shares. And so now he just basically rolled his investments into that company and sold shares in that. And that's how Berkshire Hathaway took off. That's what it was, like dead serious. I'm a very big proponent on buying securities, but I'm a bigger proponent on buying quality and not junk. Does that make sense, Sal? Now, I'm very much a big proponent of this company here. So you can, at $25.32, I think you can take, if you're looking to buy a couple shares, buy a few shares and start building your position. If you're wanting to wait for another blue dot, and then you have, the buy away, right? So PPTA, we're going to upgrade that. I'm going to add that to my buy side of things. PPTA, I'm going to go ahead and say buy, and we will put 10.19.25 and 25.32. I'm going to slide that up there. Let's get to Coinbase really quickly. Coinbase, Bitcoin again, it's back up from 108 to wherever it's headed to next. And Coinbase is been up and down, right? People, they really track along very well with the price of any crypto at any given time. I would hate to see them drop down to 213, but they are recovering some. We're still not in the buy zone here. We still don't have buying energy, and we don't have a blue dot yet. So until we see that, that's when I'm looking for the buy. If we look at the Fib Mastery, yes, we should potentially come up, but this could also push down further before we see the rally, right? That's can happen. So on Coinbase, be a little bit cautious and wait for at least a market energy cross or a blue dot from HFT before you just begin buying. Okay, let's see. Let's go in a few others here. We did Tesla, we did did this. We didn't do VRT, TSM. We did that. We'll do Walmart real quick. WMT. Walmart, I be honest with you, I think Walmart's a great company to own, no matter what, especially with what we have going on right now economically. If I can find that on here, I'll see next. But actually, I'm gonna look for it over here while I'm talking. But Walmart, with what they've done for with in the healthcare space, as well as just, they're going to be a staple, especially if we have, um, you know, worsening economic condition. Um, if that happens, then we will see, Walmart could be like a great opportunity, right? No, let me see if I can find it here because I want to share this with you guys as well. Case. Nope. All right. I'll have to find it here in a second. So, last few things we'll look at here, gold. Let's hit a little GC, and I didn't do that. And then there we are. Gold. Look, gold's at an all-time high. We've got a little selling energy in there. Tyson's fib indicator says it's pulling down. Look, I don't know if it is or not. Maybe we'll pull down to 4,100, but if the government stays shut down and more tariffs get introduced, if a true social post happens, people are going to pile into gold again. Right? Gold is the safe haven. So yes, we needed that little bit of reprieve, but gold is still a good opportunity here. I'm not going to doubt gold until it gives me a reason to. If we look on the shorter term on gold, if you're trading GC futures, you can go with the ups and downs of it, right? There is selling opportunity now. It'll probably fall down into 44,224, and then you'll probably get the next rally up, and et cetera, et cetera, et cetera. Do I think gold is in the downtrend for the good? No, I do not. I'm going to go ahead and say that. No, I do not, right? Let's go NQ. It should just know what I mean when I type in the NQ, right? On the daily, you see a little bit of a pullback happening here, right? Those tech company earnings, that'll really more than likely drive the NASDAQ higher when we get tech earnings come out. I'm still much a buyer into the NQ, and I'm gonna, continue to keep buying into the NQ. Only at right times though. I'm not just buying to buy. If I'm looking at, intraday trading here, again, selling opportunity here, could sell it down for a little bit, especially with selling energy here. We could see, because of the government shutdown and various other things, we're in that territory where we may see some more costly moves and more impact into the market, right? We don't know on these shorter terms what we may see yet. We haven't recovered to the last big dump of the market. Who knows what's going to happen coming this week? All that I can tell you to do is if you're trading the NQ and you're trading short term, let's see. Yes, Bryce, we did, and I'll bring that up, right? I'll bring that up as well. Again, so that was actually one of the things I led off with. So if that happens, then with the NQ, just be cautious, pay attention to the indicators that you use, and then the news is going to drive the market more than anything else. But when we get into tech earnings season, expect the NQ to rally like crazy. If Tesla is a big miss come Tuesday, then expect, NQ to drop, right? That just is what it is. Same with the ES. And speaking of gold, and I'll also bring up silver as well. If you are a silver trader or gold trader, there is, yes, Bryce. So Bryce has said, hey, did we talk any about the government putting together a committee to consider reevaluation of government-owned gold price currently at $47.20 per ounce? How would that impact everything? Bryce, it actually would more than likely weaken the dollar further. And the main reason for that is if you're an outside investor and you have your choice to either A, buy US dollar debt that they're, pretty much maxed out on. Every other country is selling said amount of debt, and they're at 36 trillion, $38 trillion worth of debt right now here in the United States. Every single citizen, if we all paid $100,000, we could put a sizable dent into the debt, Bill. But I don't know anybody wants to do that, right? Because they'll just waste it up there. So what that would do is put more faith into gold than it would the US dollar. And so you would see it would see a deep devaluation of the dollar, I think, a further devaluation of the dollar as compare. However, a low dollar, a weak dollar is good for trade, but you can't. One of the things that is a common misnomer, you cannot have a strong, no matter what the current country is, you can't have that country have a strong dollar and also a leader in exports. It's just not going to happen. It's impossible. You cannot have those things happen. I think you're more Austrian than Keynesian. No, I'll be honest. I don't subscribe to any particular rule of thought, Sal. I am a true just facts are facts. I think that a lot of times people try to get pigeonholed into one side or the other, and they forget that at the end of the day, facts are facts, right? Like it just is. What if you touch a stove that has been on, you're gonna get burnt. And there's just things that are factual that people like to argue with. And it's idiotic, in my opinion, that people sit around and argue about things. Look, I'm going to give you guys one of my again, some superior wisdom here. Somebody said this. I can't remember who it was that said this, but they said that if two people argue about a decision for more than 15 minutes, then both of them are wrong. Neither have the answer. Both are incorrect. And it's so true. It's all about showing faith in what is going to serve the economy and what's going to grow America, right? I'm very optimistic about the future, but I'm just like he retweeted, right? There's going to be pain before we go through it, before we get there, right? SP, we're going to continue for a little bit longer here. Don't worry. Let's see. So let's go into one or two more, and then I got something special I want to share with you guys at the end of this. It's about a few different ratios that I've been paying attention to that I want to share with you guys. Did we hit? I know which one we need to look at, Priyanka. Our good old friend, AppLovin. Right. Let's see. Let's go to daily time frame here. So AppLovin, it did get a little bit of a pullback. However, big fear here. We got an EMA cross, and that's letting me know that, hey, we could see this thing go lower. But want to add a couple more of these on. Let me do this. EMA. I just want to look at a 50 and a 200. Let's see if we've hit that. And 200 period moving average. So we have hit the 50 period moving average and we've stayed above it. If we do see a 20 period or this red line cross below the 50 period, that ain't a good thing. We're still at the shorter, the 8 and the 20s right there. That's okay. That can recover. 20 to 50, we know we're going to hit the 200. And it has been, since the last time we hit the 200 period moving average, it's been 173 days or 119 trading days. So within that time period and within the next few months, that 200 period is probably going to come into play. So hopefully we continue to see a rally here. Oh, I didn't say anything about silver. Silver I really like. I hold silver. I've been holding it for years though because of the ratio split. silver generally trails gold. 6 ounces of silver generally equals 1 ounce of gold in price, but we've been out of that ratio for a while. We've caught up quite a bit, actually, a lot in this last month or so. If we see, if selling energy comes down and buying energy stays in, if we get a blue dot on a lower time frame to buy, I'm a big buyer in silver. Yes, we cross, the moving averages like the 50 and the 200 do very little on a 15-minute time frame, just FYI. But still a little bit of push down here going into the evening before probably get a little rally in the morning in silver and gold. Okay, in silver and gold. Let's see. Sal, I've never used tungsten, only in golf clubs. I will say that. Every golf club nowadays, just that's all they advertise. Okay. The other thing I was going to talk about here, and I'm going to try to find it. Case-Shiller. How many of you have ever heard of the Case-Shiller PE ratio? And S&P 500 PE. How many of you guys have heard that? So Robert Shiller and Case, yep, they had originally predicted the housing crisis in 2006, but no one paid attention to them. Literally, they released this amazing paper, this a huge book that said a housing crisis is about to happen, and there was like one reporter in the room. Fast forward to 2009, when they talked about it again, people were clamoring for their time. They won the Nobel Prize for their housing price index because it is such a great tool for housing price index. Well, a couple of things they also did that not a lot of people talk about. One is Case-Shiller has a PE ratio, right? And that's price to earnings ratio, and that is based on the S&P 500. Now, this goes back to, they started their ratio back in 1871. So would you guys trust an indicator that's been right since 1871? Yes or no? Like, let's be honest. Yes, right? You put a little bit of stock in that, right? So how about this? 1929, we topped 30, and then we had a market crash. 2000, we topped 40, and then we had a massive market crash. Right now, we're sitting at 39.79. There is, let's just list out stuff here really quickly. Stock market, all-time high. Gold, all-time high. Silver, all-time high. Home prices, all-time high. Interest rates, still high. We're not at that 20%, but we're still high, right? A lot of people say, oh, cut the rates, cut the rates, cut the rates, cut the rates, right? Right? Inflation, high. Higher than we'd like, right? Higher than we'd like. What else? Oh, debt. Why don't we talk about that? How many of you guys know that in the last 10 years, debt, personal household debt, non-mortgage, right? Non-mortgage debt. I'm going to give you guys a guess. How much do you think that has increased in the last 10 years? Type it in right now. What do you think? %, 60%, 120, 200, 300, 39, 250, 200, 430%. That's how high it is. 430% increase. Debt is at an all-time high. Does anybody have a lot of confidence in that, or do you see that something could break at some time? Right? Could be banks, could be government, could be homes, could be debt, could be one thing will shift. And then we will have that big correction, right? Could be student loans, right? Yes, Dan, China's dumped, China went from $1.6 trillion worth of US debt that it held down to 800 billion, and they're still selling off more, right? They're still selling off more. And that's something that you're going to want to watch this stuff, right? And here's where it's going to impact you the most. Let me ask you this. What happens to your IRA, your TSP, your 401k, your managed account, your 403b, right? What happens to those accounts if the market drops? Are you going to lose money? Yes or yes? Look, I'm going to tell you guys this, and I offer this every week, and I'm going to offer it tonight. Right? I'm going to give you guys two opportunities. One is literally, I offer people a tool to not lose this money. Like, I can't tell you how many times and how many times I've seen people lose so much money and they didn't have to. Right? In 2008, imagine if somebody didn't lose the money that they had in 2000 or in 2008. Imagine if you were protected from that. Literally a 0% floor, meaning if the market increases still, you're going to keep locking in gains. But the moment the market drops, and I don't care if it's 50%, 70%, 100%, I don't care what it is. As soon as it drops, you lose nothing. Okay? You lose nothing. And right now, some of these companies are giving a 50% bonus to anywhere from a 30 to a 50% bonus for just depositing. So if you deposit $100,000, Stuart, you tell me, you saw that you got a $30,000 bonus minute one, day one, right? And see, Dan, it doesn't have to be that way. I literally, it doesn't have to be like that. Guys, what I'm telling you, it really, truly can be, is worth the conversation that we'd have, right? So what I'm going to do this, look, it's either a conversation with myself or Brent, and there's a link right there that you guys can book time on my calendar. It's a free conversation. We'll talk about what your situation is. Can we offer anything to protect you with growth? Because you get the growth of the market without ever losing anything. That's going to be better off than anything. And that's one way you guys can be with me and talk with me and book time with me. I want you to book time, because if this plays out, let me just show you the math here. Just to give you guys the math, right? So I don't have what I have done, and I have access to this. I have the historical data, right? I downloaded all of this historical data, and then I created an average from all the years. Every year I have an average of, okay? And what I did with that average is I figured out, hey, over the last nearly 200 plus years, what's the average of this index? Well, the average is 16. Okay, the average is 16. We're at 39. Let me just explain how that works. Okay, you take the price of the stock market of the S&P 500 because that's what this covers. So we just use the SPX for simple sakes, right? $6,664. So you take that stock market price, so SPX or S&P is 6664. You divide that by the current ratio, which is 39.5. Okay, that equals, for quick math, 6664 divided by 39.5, that is 168.71. All right. Now, that gives you your bare bones stock market price. So, price without earnings is 168.71. Okay. You multiply that by the average ratio where it should be and has been for over 200 plus years, where it should be, right? Which is 16. We times that by 16, that's $2,699. So if you take 6664 minus 2,999, that's a $3,600 drop in the market. Does it have to drop that much? No. And hopefully it won't. You know, I'm sure we will correct it, catch it very quickly and put a stopgap in place. But that could ruin some people's retirements. I don't want you to have to go to work, back to work. I don't want you to lose everything in your TSP. I don't want you to lose what you've worked your ass off for. Excuse my French there. I'm very passionate about this. Because you made one mistake and we didn't have a conversation. Because I didn't convey to you the importance of us having a conversation. We're talking one conversation here. Maybe 45 minutes, maybe 30 minutes. Doesn't matter. Maybe 10 minutes. You may be set up perfectly. And I'll say, hey, don't change anything. And if anybody tells you to change something, call me because I will bless them out for you. Okay. That's just somebody who's just trying to take your money. I'm not here to take your money. I'm not here. I'm here to make sure, one, your money grows when it can. Two, it's protected always and it lasts you for the rest of your life. And your kids and grandkids will benefit from the conversation that we have because it could put money away for you for a long, literally, like there are people, I can use a family as an example here, right? Said a family put away $1 million in one of these. They plan to retire in 5 to 6 years. They'll have about $2 million from that million going into retirement. They will make a guaranteed 100,000 plus a year every year for the next 120 years. And it will leave the beneficiaries right around $4 million. That's the benefit of something like this. So let's have that conversation. Or at bare minimum, right? Bare minimum. Join the webinar that I'm going to be having on Monday. So I'll send that link as well. Thank you guys so much. I see you guys are booking. Right now I'm getting updates on that. And I'm going to send you guys, oops. Nope, that did not work. Let me find that Zoom page again. 1 second, guys. I didn't mean to. And this is for the webinar tomorrow. Okay. So look, don't get caught in this mess. And even if it does continue to rally, that's fine. What was somebody asked what was it in 2008? In 2000 and April of 2007, it was 29.55. So just under 30. And then we had that big drop, right? And it fell back down to 15. And then we've been above that ratio, that number that we wanted to be at since 2014. We have been above it. Now, we weren't, parabolically above it during that time, right? But now, how about in 2021, in October of 2021, prior to all the COVID shuts down and all that, we were sitting at, in January 2019, we were at 30. We had that little drop there in 2020 and came back. 2021, we had that big drop in 2023. And then there's other stuff that I'll tell you about. And I'm not trying to raise fear. I'm just trying to raise information, right? In this day and age, information and the ability to process that information is exactly what you need. So let's see. WB, here, do this for me. Why don't you just book time with me when you're free then? And we'll have a conversation about it. Does that work for you? I'll send you that link again to book time with me. And let's see, Jonas, I got your phone number there as well. I'll have somebody reach out to you tomorrow if that's good. All right. So look, guys, I appreciate you all. I thank you guys a lot for being here on Sunday. We will see you guys next week. You should be registered. You should get the emails every week. If you're not getting the emails, okay? If you're not getting the emails, reach out to me or Brent or Discord or anything. All right? Reach out anywhere. And I promise you, we'll be reaching out to you. Trade updates wise, a lot of holds because of the wishy-washy and the froth in the market this week, for sure. But that we will definitely have clarity as we come through the rest of earnings season. This week, again, we have some good amount of earnings coming out, but a couple weeks from now or next week, we start to get into the tech sector, and that's where we'll see some big growth there, and we'll know kind of what direction the market is heading. All right, so I definitely NextEra Energy. That is still pushing down. I do like this blue dot, and I do like Market Energy, so maybe a little bit of buy there. I wouldn't be mad at buying that to 84.99. Let me add on Tyson's tool here. Yeah, actually, I mean, Tyson's tool is calling it all the way to 85, so not mad at that one, Olga. So, I do this every single week, John, and we use these tools. We go through the market, we open stuff up. I'm going to be building this out more and more, as more things come and more opportunities come, I will be continuing to improve it. So, let's see, Merv can't get accept. There is no, it's auto, like it just puts you in there. There shouldn't be an acceptance there at all. So here, try that again there. All right, and appreciate you all. Have a good one. We did talk about the NQ, Brian. Real quick, I'll recover. NQ looks to be like a little bit of a pullback going into the rest of the day, or going into the evening hours. So probably a pullback and a push down for a little bit. Still have selling energy, still selling, but if we're looking here at our next kind of, this thing is bouncing between two fibs. That's why you see that, the long term and short term here. So this is where it's saying it could pull back to right in here, 24,835. So another 100 and some point drop, and then comes the rally up. So, I think a lot of it hinges on what happens in the banking sector and earnings tomorrow. Like tomorrow before the bell, we got a lot of people reporting, and tomorrow after the bell, we got a lot of people reporting. And then what Tesla does on Tuesday, right? So 20th and 21st, big days for the market. All right. So you guys have a great day, and I will talk to you guys. I'll see you in a webinar tomorrow if you're registered, or um on an appointment with us, or if you I will also potentially see you guys in a webinar this week, right? I have several on hedge fund trender and market energy, as well as a couple others that I may be hosting as well. So looking forward to seeing you guys there. Have a good one. Thank you guys so much.